Can you give me some specific examples of this process playing out in the last 26 years, where a certain sectoral bet or a thematic bet or a stock play, which really played out well, which UTI was able to figure out, which most of the AMCs could not do? Is there any examples you can give me?
I would say the one example that I can give you is of a company called Eternal.
Zomato, right?
Zomato, which is now called Eternal, which IPO'd in 2021. It was a loss-making company then. There was, the conventional framework would have dismissed that business altogether because on a conventional parameters, the company was not making profits. So we had to use something different. We knew that, I'll take a step back. We knew that the business is great and the management team is equally great because we had seen that over the previous 6 to 7 years, which is between 2015 to 2021, their core business then, which was food services, like you said, Zomato was their key business back then. Now Blinkit is the bigger business and Zomato is slightly smaller than Blinkit. Their core business had seen brutal competition. By the way, I have forgotten the names, but there were at least 7 or 8 companies which were into food delivery. We used to call them food aggregators then. There was, of course, Zomato. There was, of course, Swiggy. There was Tiny Owl. There was Food Panda. There was Uber Eats. There was Amazon, by the way. And I'm forgetting. There were no less than 7 or 8 companies, all of them very well funded, either by private equity partners or very, very deep pocketed parents like Uber and Amazon. And these guys, were just a bunch of partners out of college. They didn't have any backing. They did get initial funding from InfoEdge, but they were very frugal with their money, but they were extremely passionate about solving this problem. And they survived. So in 2021, when we came, what we did remember about them is that, look, they have been able to withstand this competition coming in from the big giants around the world and very deep pocketed private equity backed companies. So there must be something they are doing. The other bit of news back then was that they had already gained 60% market share. So from a brutally fought market where their market share was just 15-20%, they had reached 60%, which was telling another tale. The third thing we said is that, look, we know that they're making losses, but they're also making losses because they're spreading their wings very far away. But let's just test them for their core markets. Their core markets were Delhi and Bombay. More Delhi, less Bombay, because they were a north-based company. So we said, let's just look at the kind of profits that they are making in Delhi. And that gave us very rich insights, which told us that, look, in Delhi, they're already profitable, maybe already at 4 to 5% margin. Why they're not making profits at the aggregate level is that they are making deep investments into a Jabalpur and a Nagpur and a Kochi, because they're spreading their wings. They are recruiting a lot of people. And that will lead to elevated losses for a couple of more years. We did bite into that IPO very, very carefully. But like I said, we just took a very small bite at that point of time. Post listing, we kept tracking them quarter after quarter, meeting them. And we were able to see that very sure progress that they were making. By 2023, their food services business at the aggregate level had become profitable and was inching towards 4 to 5%, which was what Delhi was showing 3 years back. So I think that framework, held us in good stead. Once again, like I said, if you know what are the right questions to ask, if you know what is the right data to look at, and if you follow that process very dispassionately, a lot of answers do come and a lot of things get answered. So that was one example.